In this presentation, we will discuss a new client engagement questionnaire, a list of questions that we can ask when assessing whether or not we want to take on or work with a new client. For more accounting information and accounting courses, visit our website at accountinginstruction.info. These are also questions that we can ask ourselves if we're thinking about setting up a system for our own bookkeeping system. We do have a copy of the questionnaire, so you can take a look at the questionnaire and print it out, use it, adjust it to whatever your needs are for a questionnaire to jot down your needs for a specific client or for the bookkeeping system. This is going to be a couple questions that we want to go through if we could imagine ourselves in an interview process, thinking about whether we want to take on an engagement with ourselves and a new potential client. So some of the questions we might ask are, what type of industry are you in? And that'll give us an idea if it's going to be related to industries that we have worked with in the past. Also give us an idea of the things that we want to watch out for. And that's going to be things like, does that industry involve inventory? Because that's one of those things that we want to be more sure on whether or not we want to take on an inventory related customer or not. And there may be other things that are industry related that will help us to determine whether or not our bookkeeping system will be useful for that particular industry. And we'll get more specific questions related to those needs as well. Is it a new business or a continuing business? So is this business starting from scratch? Is this going to be the first year of operations, or do we have a continuing business? It's okay either way. If we have the continuing business, we can still enter the books as of this point in time going forward. But then our needs, of course, may differ in terms of what is that prior information. And we may have questions and look for information about how the prior business has been doing, possibly how the prior bookkeeper was, what was the prior bookkeeping system, and why has it changed. We may ask the primary reason for bookkeeping service. What are they looking for? And normally, if we're applying this system, we're usually looking for a smaller bookkeeper. So their main need, we probably know, is going to be compiling data for year-end tax preparation. It's probably one of the major reasons that you're going to have the information. So they want the compiling information for taxes. Typically, is what we were assuming to have one of their main needs, and possibly, of course, for internal use as well. Just confidence that they're recording their information, having financial information, which is somewhat reliable. The other thing we could ask is the type of entity that they are, meaning are they a sole proprietor? Are we a partnership, a general partnership, or a limited liability company, an S corporation or a C corporation? Now, we're expecting, of course, most of our clients to be sole proprietors. That's what we're kind of gearing towards with this cash basis type of system. If they're a C corporation, a normal corporation, that usually means that they're larger in nature. Most C corporations are larger. Now, it doesn't necessarily need to be the case. So if it's a small C corporation, for whatever reason they want it to be a C corporation, and they still have a very few transactions, then we may want to take that on. But if they're a C corporation, we would probably be more suspicious that it would be a larger level, and they may need more than we can provide in terms of the types of bookkeeping that they're looking for. Our bookkeeping being geared towards a limited number cash basis system. If they're a partnership, they could be fairly small and still be a partnership, and we could take on a partnership as well. However, we have the added problem of them being partners and tracking the capital accounts. So if they are a partnership, we probably want to make sure that we are working with a CPA firm in order to allocate the net income properly between the capital accounts, so that the two partners have that allocation. So we may have one more level of assurance that we might want to do above and beyond just entering the data for the net income at the end of the time period, compiling the data. So if they're an S corporation, it's possible to have a single member, even S corporation, a very small S corporation. So if that's the case, we don't have to be too intimidated by that. It's possible to have a small customer that has the S corporation. It's probably less common for this type of client that we're looking for. If they have an S corporation, we might think maybe they're larger than what we're doing, but it's possible they're not, because they might have other reasons for an S corporation. So the type of entity can give us some idea, and we're talking here basically tax identity. So these are going to be tax identity. How they're going to file their taxes is one way we can consider these types of entities. We would expect the sole proprietor. Who is responsible for financial reporting and taxes? Now, again, if it's a sole proprietor, we would expect to be talking to that individual because they're probably the ones talking to us. If we have a larger industry, or if there's a few people involved, then we want to know specifically who is it that we should be going to that's ultimately responsible within your organization for this information, for the financial information, so that we know who the go-to person will be. Again, typically for smaller companies, we would be talking to that individual, hopefully, to see if we wanted to set up an engagement such as this. Have you worked with other bookkeepers in the past? So we want to say if there are a continuing engagement, how have you done your books in the past? How have you done your taxes in the past? Who do you work with? Who have you worked with in the past? What's your system there? And with relation to that, if you have, then who were they? If you would be willing to give us that information. And most of the times people are, because there's a reason why they stopped, or whatever system they have, whether it wasn't working for them, whether they thought there was some problem with the people that were putting it together, the system just wasn't giving them the right information. What services were provided by the prior bookkeeper? Did they do full bookkeeping service? Did they do just a partial? Did they just kind of compile things together at the end of the year for taxes? Or how did this work in the prior bookkeeping system? What were your likes and dislikes? Did you like the bookkeeping system? What were the things that are making you change, in essence, from one bookkeeping system to another? And may we contact them. If it is a bookkeeper or another CPA firm or someone else was compiling, it's useful for us to contact them. I mean, because we can then get a relationship, and we might need data for ourselves, possibly for our bookkeeping, but possibly also if we try to recommend some other things such as tax preparation or financial statement preparation, then those things oftentimes are necessary for us to have some of the prior data in order to compile those. Maybe for taxes, we may not need them for taxes if it's a small company going forward, because really we oftentimes just need the profit and loss, the activity throughout the time period, which we can put together. But we may need some other information. And it's also useful just to ask the other bookkeeping firm, what was the client like? Is it okay if we ask them, did you get along with the client? Were they good? Did they pay you on time? And those kind of things. So if it's okay for us to ask the other bookkeeper and contact them, often a useful thing, because we want to be careful on who we start doing the bookkeeping work with, because clients that are difficult could take a lot of time and result in not being worth the payment. We can in situations of not getting paid and putting in a lot of work. So we want to be careful on that, and if we can contact any prior bookkeeper, that could be useful in that regard as well. Does your business have inventory? Now that's going to be one of these areas that our system that we're discussing here is going to be one which inventory is something we would probably want to stay away from most of the time. We're going to give an example problem with inventory so you can see how to work around it if we picked up clients with inventory. But what we're not doing is giving a full service inventory tracking. We're not going to track the service inventory within QuickBooks under the system, and therefore if that's what the client wants, we're going to have to set something else up. Now we'll discuss some ways to take a look at inventory, and your question for yourself here would be then, do I want to take on a customer that has inventory or not? Do I just want to look for customers? Do I want to specialize in the customers that are just service companies? And there's a lot of those out there, companies that I don't need to deal with the inventory for. And if you do deal with inventory, then how can we set up a system? What type of customers do we want, for those inventory needs? We still have some limitations in terms of how much inventory information we can deal with, or how we can deal with clients with inventory. Do you have employees? In other words, do you have a need for payroll? That's another area that oftentimes we don't really want to take on internally. We're going to argue here not to take on the payroll internally. It's possible to do that with like QuickBooks and pay for the full service payroll. But doing that is really, you're still paying someone for the payroll to set up the payroll, and it's going to make the system a bit more complex. It's not completely a cash basis or not information we're taking directly from the bank statement. So we're going to argue that if there is employees, then that's okay. But how are you dealing with those employees? Have you been paying them with a third party? Who's been processing your payroll before this? Because again, it has to have some kind of payroll process if it's an ongoing business, because payroll is complex. And even if it's only 1 or 2 employees, there's going to have to be some withholdings. There's going to have some process for making that information happen. So if they don't have payroll, and this could be our question once again, do we want to take on customers that maybe just don't have payroll, just small sole proprietor companies, sole proprietor not companies, sole proprietor businesses that don't have payroll and not have to deal with that at all, or take on customers and work with a payroll company to allow the payroll company to work with payroll, or maybe even try to take on payroll by paying for the payroll service within QuickBooks, which is something we're not really recommending here. We're saying basically, in this simplified system, take on the customers that don't have payroll, or customers for which you can help them get a third-party payroll individuals for. What banking institution do you use? So we want to make sure that we know the banking institution, that we can get the financial statements from the banking institution. We want to basically note that they have a banking institution for which we can get the financial statements from. Do you have a separate business checking account? Hopefully they have a separate business checking account. That's going to make it a lot easier, because our whole system is based on the separate business checking account. If they do not, if they're mixing their personal and business account, then things get a lot more messy. We can still deal with that, but it's going to be a lot uglier for us to do. We're going to take their account and we're going to enter our system, and we're going to have to then differentiate and figure out, well, is this a personal expense or a business expense? And so sometimes it's possible to do that. If it's a small company, we can go in there and we can try to ferret out and separate the two and call one a draw and the other expenses. But it's a lot more difficult. So if the company doesn't have a separate bank account for the business, we would suggest to do so, because that's how our system is set up. We're assuming that everything that goes into the bank for the business checking account is business related. And if that's the case, then the bank is really doing the bookkeeping for us, and all we really have to do is take that data and reformat it into the proper categories. If, on the other hand, we're talking about a checking account that has business and personal, then our work has gotten a lot more difficult, because now we don't know, whether these transactions should be business or personal. We can't come up with that pre-assumption that, for example, all deposits we would think would be from a customer if it was a checking account for a business. But if it's a personal checking account, maybe they're getting money from other sources that aren't business related. And that really muddies the water up in terms of how are we going to separate out the data. So if they don't have a separate checking account, we would really want to set up a separate checking account typically. Do you have a business credit card or business credit cards? Another area that really kind of muddies the water. If they don't use business credit cards and they just use the checking account, then that's basically easier, because we have the business checking account. The credit cards, if they use them, are they separating the credit cards for their business from personal? Again, if they're using one credit card for business and personal, that gets messy. We would at least recommend having 2 credit cards. If they do use credit cards, we have a question of whether do we want to take on clients that have credit cards we have to sort out, or do we want to set up a system that we're not sorting out the credit cards and that they do that outside the system, or we do that, or something outside the system? We can also ask whether or not they pay off the credit cards every month or have an outstanding balance on the business credit card, because that makes a difference in terms of tracking it. If they pay it off every month, then we know that the amount that they paid, the amount that hit the bank statement, is for those transactions on the credit card. If they paid off only part of it, now we have this loan, this liability, which is kind of accrual accounting. So if they're dealing with business credit cards, it adds a level of complication. We'll discuss how to deal with that, a couple different options we can deal with credit cards as well, but that's something that we want to know about up front and know about whether or not, or how the client would like to be dealing with the credit cards. How can we transfer data each month? Now, each month we're going to need, at the minimum, a bank statement from the customer and possibly the credit card statement. So we need those 2 things, and then we're going to enter the data, and then we're going to provide back to the client, the customer, the financial statements each month, and or a backup file of the QuickBooks data. So we need to know how are we going to do that? And there's multiple different ways, of course, that can happen. We can always go by just mail. We can use email. If we're not comfortable with email, there's different ways that we would want to format the email to make sure that it's secure and whatnot. If we're not comfortable with email, then there's other kind of formats we can use, including cloud-based formats like a Google Drive or the Dropbox. Different kinds of ways that we can store it on the cloud that can be more secure. We're looking for a secure way to give and receive the documents. Obviously the files that are given, in terms, if it's just a PDF file for the bank statements and we're giving back PDF files, then the size of the files are pretty small. So we can get probably free Google Drive or free Dropbox, and the email wouldn't be too large to email those type of files. However, if we are providing backup files, and that's one of the benefits of this system, is that we don't have to trade backup files, which are larger. We're just basically giving back and forth documentation, which is typically pretty small. So we can do that over basically any distance. We can do that, and we can find pretty secure ways to do that. If, however, we're giving and receiving backup files for QuickBooks, then that gets a little bit more difficult. If we give the backup file back, then we're going to have to give that back in some format that's large enough to be able to store that much data. Again, it's probably possible on a Google Drive, but if we have multiple clients and we do that a lot, then we're probably going to have to pay at some point for the storage space for that kind of system. If we're just giving documentation and we're only giving the backup file as requested when needed or periodically, then we can probably set up even a cloud-based system for free, basically, and be able to go through that process. But whatever the process is, we want to make sure that both the client and us are comfortable with it from a security basis and from just a logistics basis. How are we going to do this? Make it as easy as possible. For more accounting information and accounting courses, visit our website at accountinginstruction.info.